Hi there, I'm Tyler Ballhorn. Welcome to the Stockscores market analysis for June 14th, 2010. The first chart that I want to look at this week is a chart of the S&P 500 ETF, symbol SPY. It could be said that the downward trend line that is held up since April 26th was broken on Friday, and this morning we had a gap up on the open, and that was, of course, a positive sign. You can see that the sentiment stock score is starting to creep higher. We've also touched off a support line here on the S&P a number of times. So there is this sense that the buyers don't want to let prices go any lower, but they still haven't gathered the momentum to push prices higher. I think what we see happening right now is we have resistance, very short-term resistance that's built up. The market hit that this morning and couldn't break through, and really that's to be expected. It takes time for upward momentum to build. My expectation is that in the short term the S&P is going to pull back in like this and then bounce around, and with each little cycle the amount of price volatility will diminish, but ultimately we should see a break through that resistance line sometime this summer. Of central importance to where the overall stock market goes is this chart, the euro. This is a chart of the European or the Euro ETF. FXE is the symbol. And you can see that we've fallen quite far below that longer term downward trend line. Now this morning, the euro gapped up. That meant the US dollar gapped down, and that was really what motivated stocks to go higher. However, around midday, news that the Greek debt had been downgraded to junk status by Moody's sent the euro down, sent stocks down, and sent the US dollar up. I think longer term the euro is working on a process of reversing this downward momentum, and ultimately it will get back to that downward trend line. It's got some distance to go there, and as it works through that, US equities should benefit. Here's the chart of the US dollar index. You can see that its upward trend, the short-term upward trend, has been broken. We gapped down on the US dollar today. It came back to close above its open right at the high of the day, and you may see the US dollar index come up a little bit over the next few days, but ultimately I think it's more likely to go lower and come back to its longer term upward trend line. That will help stocks as the euro goes higher, as the US dollar falls. You should see global stock markets start to find some footing and do better. It's not going to happen overnight, but it's a process that will carry out over the next couple of weeks. Now this chart is of the Canadian stock market index, the TSX 60 ETF, symbol T.XIU, and it's really been insulated from much of the price volatility that we've seen in global stock markets. It's not a great looking chart, it's pretty much going sideways, but when you compare it to the charts of the S&P 500 or some of the European markets, this one has held up quite nicely. My expectation is that it is going to continue to build this ascending triangle pattern, particularly if the US dollar starts to weaken. That will help out commodity prices, which of course is what the Canadian market is built around. So I think that the Canadian market is a good place to be. It may not be exciting, but it's relatively safe compared to some of the other markets. The Canadian dollar will be another beneficiary to a US weakness. It has really been one of the top performing currencies outside of the US dollar, and it really shows how the market globally is looking to Canada as a safe haven. It opened strong this morning, fell back as the euro fell back and the US dollar rose, but really the upward momentum is starting to build, and it looks to me like the Canadian dollar should rally back towards par value in the weeks to come. We may get some bumps along the way, but I think that the Canadian dollar will benefit from stronger commodity prices if the US dollar can weaken. And speaking of commodity prices, here is the chart for oil. It has formed a rising bottom and then broke from a rising bottom. It's a very steep upward trend, so I don't think that we're going to see this rally back real fast. There's a lot of fear in there, but I do like how momentum is beginning to build on the oil prices here, and we should see that continue. Perhaps oil coming up into this range here, which would be around $77 to $80 a barrel on the spot price of oil. For those of you that are long in the gold market, I would continue to stay long. We have a nice optimistic chart building here, there is resistance, and you can see that volatility is diminishing over time. If we were to sort of pace out what's been happening, if we continue that trend, we're going to see diminishing volatility, and what will be important is whether gold breaks through resistance or breaks down through the upward trend line. I'm not comfortable buying gold here, but if I am long gold stocks or gold as a commodity, I would stay long as the chart pattern does favor an upward move. Finally, here is a chart of natural gas, which has actually been doing not too bad over the last few weeks. We have not broken that long-term downward trend. We made a nice little breakout here from a head and shoulders bottom. You can see the shoulder, the head, and the shoulder. That's positive. What's critical now is whether it can break through that longer-term downward trend line. If it can, then we probably rise up into this price range, and that would be a real welcome sign for many of the oil and gas producers because they've really been beat up badly on gas prices. I think it's an early stage upward trend. It has some potential to go into a longer term trend, but for this point, I look at it as just a trade, but something that if you are long natural gas or natural gas stocks, looks good to stay long, knowing, however, that that downward trend line may hold up. Well, that has been the Stockscores market analysis for June 14th, 2010. For more information on the market scanning tools that we offer or some of the analytical tools that we offer, give us a visit at www.stockscores.com. Have a great week in the market and